Well, hi everybody, this is Kim. Thank you so much for clicking on my video. As you can tell, today I'm going to be talking about Doordash. Their first quarter 2022 earnings are up, and they credit reduced driver promotions as the reason. What? Oh my goodness. Okay, so Doordash reports a 35% earnings growth. This was the first quarter of 2022. They feel that the company can still grow even after skyrocketing pandemic-driven highs. So they think that they can maintain this rate of growth even with the economy failing. They say that the total number of orders delivered during the first quarter of 2022 rose 23% to 404 million. That's crazy. They also state that they added the most new customers to their service since the first quarter in 2021. So they had a good first quarter, 2022. Not a lot of other companies can say that. Reduced driver incentives is the reason. They credit removing promotion and incentives from drivers as a huge reason for the growth. It's a lot of money they didn't have to put out. Obviously, keeping its current delivery drivers is not important to them. They know that if the seasoned, experienced drivers leave, that new ones will sign up. I watched a video, so this is a link to this article where I got this information, but I watched a video where a stock person was interviewing Tony. I don't even know how to say his last name. XU is his last name. I don't know how to pronounce it. But anyways, they were interviewing him. And he said that they had the most drivers sign up like in the last 6 months than ever prior. So they have plenty of drivers. They don't care. They don't need to retain us. I just think that they don't care at all about the quality of the person that they attract. And they don't care if the experienced drivers stay. They probably just assume that they don't, and that they just have a bunch of new drivers who will accept all the terrible offers, drive really long distances, and make very low money. I don't know. It's baffling to me. This kind of pissed me off when I saw that. Now, I'm in an area where we never really have promotions and incentives, except for maybe during the holidays. So I don't see any difference of things being taken away because we never had them in the first place. But I know that a lot of you rely on those incentives and those promotions and the peak pay. So anyways, let's move on. They have all-time highs in GOV and MAU, as well as average order frequency and users of Dashpass. What is GOV? Gross order value. What is MAU? Monthly active users. So he was saying that they have an all-time high, the order value, and the monthly active users are at all-time highs. So that means that more and more people are ordering, and they are ordering more food. Now, I don't know. Okay, I'm not saying he's lying. He must have some data to prove this. Maybe there's just so many more dashers that the orders are diluted, but I'm seeing a lot more low order value for orders, like at $20, $23, $15 orders. That's not an order to me, but that's what the customer is paying. Like, they're buying, 2 meals at McDonald's or whatever. But anyways, yeah, it's interesting. I don't know how they're coming up with their numbers, but I'm not saying they're lying. They're obviously telling the truth. They obviously have these high ratings. I mean, monthly active users. So I wonder how they figure that out. I'm going to look that up. But anyways, I want to ask you to please like, share, and subscribe if you find this interesting. I find it very interesting. Wait till you see this chart I'm going to show you. It's coming right now. So this is the U.S. monthly share of sales among top meal delivery companies. So this was, I have showed this before, but not this specific chart, but from this company, this Bloomberg second measure. So here's DoorDash, the orange, right? So it's January 2018. Its share of sales was, about 18% or so. And now look at it, just skyrocketing. And now it's over 50% is DoorDash. Look at Grubhub, on the other hand, kind of died. They had approximately, 48 or something percent, and now it's down to less than 20%. I don't know what happened to Grubhub. I mean, I know they got bought and things got changed, and the Grubhub delivery drivers are not happy. I don't think the customers can be happy either. Everything's late. Recently, there has been an uptick because they're getting a little bit better at sending the drivers when the food's ready and not, 45 minutes before it's ready. But anyways, and here's Uber Eats. So it stayed, up and down, but it's kind of stayed more stable. And this is Postmates, which is now owned by Uber Eats. And this is Waiter. I don't even know what that is, but it's way down here. So, yeah. So they're also crediting Dashpass as helping a lot. DoorDash credits growing Dashpass membership as it's spurring another quarterly high. The average customer placed more orders this year compared to any other year in history. The Dashpass customers. I don't know when they even started the Dashpass, but yeah. So that's that. The marketplace gross order, I forgot the word, value, hit a high of $12.4 million, and total order volume grew 23% year over year. Well, that's crazy. So these numbers are pretty, amazing to me. Tony, still don't know how to say his last name, CEO and co-founder of DoorDash, also stated that a huge impact on their success is growing their third-party convenience market. Large amount of economic potential here. Customer engagement in this category continues to improve. In that article, in the video, it was an interview actually with him. He was saying that the retail deliveries have skyrocketed. But that's partially because they've just recently added them. They didn't always have the retail. Back in 2018, I don't think they did. But they keep adding new places to deliver from. They just recently added Target. So that's going to add more engagement versus just Rite Aid and Walgreens and 7-Eleven. Although I do see a lot of 7-Eleven orders personally, I think those are generally add-ons that people do. I don't think I've ever done a single 7-Eleven that was just an order for 7-Eleven that wasn't part of another double. I'm trying to think. I probably have, but yeah. Most of the time I see it as an add-on to the customer's other order of food, and it's weird because they'll pay. Okay, this is one I recently had. It was I don't remember, some restaurant. I think it was El Pollo Loco. And then they added on a 7-Eleven. This is the same customer. All they got was a 2-liter thing of Coke. But they tipped me $4 for that 2-liter thing of Coke. And whatever they paid DoorDash. I don't know how many fees they paid them. And I don't think that it's worth that much, but they could have just gotten Coke from El Pollo Loco, or wherever it was that they ordered from. I don't know. Anyways, I think people are making stupid purchases personally. But you know what? Thank God they do. Anyways, here we go. Much more than just restaurants. It all started with the restaurant food delivery. And that's still a big category for DoorDash. But they have taken the cash generated from restaurants to reinvest in new verticals. Alcohol, fast grocery delivery, beauty products, floral, gifts, pet items. They recently purchased Wolt, which is a European food delivery platform. That was in November of 2021. I never heard of that, but anyways, that gives them more market share and more customers. And like I said, they now have Target. I haven't taken one yet. I'm tempted to. I'm not a real... I love Target. I love going there. I don't have the store memorized. And it's a big store. It would take a long time to do a Target shop, and then you have to wait in line to pay. Even if you use the self-serve, you know, there's always a line to use those, so it could take a while. I haven't had any that's been, the money has seemed worthwhile, let's just put it that way. But I am getting them now quite a bit, the offers. So, healthy supply of Dashers. Like I said, Doordash told investors that the supply of Dashers remained healthy throughout the quarter despite a reduction in Dasher incentives. He credited the removal of incentives as the key to the company's revenue growth. And that video interview that I was watching on YouTube, it was so funny because he was acting like they're so good to the Dashers and they pay them so well. And if you use your Dash Direct card, you get 10 cents back a gallon or something of gas. I'm like, okay, if gas is $7 a gallon, 10 cents isn't going to make a big difference at all. Oh, anyways, they just keep lowering the amount we're getting paid. The base pay is so low, and they aren't doing anything for the Dashers. It's the customers tipping, and I'm glad the customers are tipping, because otherwise it wouldn't be worth doing it at all. This is the link to the second article. I'll put these down in the description so you don't have to write them down. Anyways, this was what I was saying, that the lack of compensation, incentive, and promotion. So now if they've gotten rid of the incentive and promotions and they're not raising the pay, I think Doordash is risking many Dashers leaving the platform. As soon as it becomes unprofitable, I know I won't be doing it anymore. I love it. I really do. I enjoy the delivery. I think Doordash has a lot of great potential. I don't like the way we are treated. I don't like that the app crashes constantly. I don't like that they allow customers not to tip. But it is still the majority of the offers that I get are from Doordash. I do Uber Eats and Grubhub also, and they just can't compare to the order volume that Doordash has. So Doordash is doing something right. They're getting the customer orders, but I don't know. Anyways, that's all I had to talk about today. I read this and found it very interesting that they had done so well in this last quarter, despite the economy really not doing so well and the high cost of everything. I think the restaurants may be hurting, and Doordash probably doesn't care. I am sure they have increased their cost to the restaurants, and that's part of their increase in revenue. I'm not sure, of course, but I wouldn't put it past them. I hate to bash Doordash because I really do like that platform, like I said, but they just don't seem to care for the Dashers and care about the Dashers. And everything he says in these articles leads me to believe that even more. But anyways, let me know if you agree and what you think of these comments. And I'm going to try to find that YouTube interview again, and I'll put it in the description below so you can watch it. It was very interesting and eye-opening. Let's put it that way. Anyways, hope you're doing great. Hope you're healthy and safe and making lots of money. Make sure you subscribe so you don't miss any of my videos. Thanks so much for watching. See you next time.